unmute, start the camera, testing. All right. Well, is the audio working? All right, here we go. So good evening. Welcome. Apologize for that. What I was saying, if you were a lip reader, you know what I was saying. But for those of you, 99.9% of the other population, I do not, I'm testing this software out. So the point is, it's a test, but I'm also here to provide you some value tonight. So thanks for your patience. We're about 5 minutes late getting started. Let's take a look at Bitcoin first. Bitcoin, everyone on Twitter is talking about Bitcoin. It's breaking out. It's up, 2%. It's a start. It's good. That's nice to see. As I've been mentioning the last couple of weeks, I'm 100% long Bitcoin. I have been since it came back up under here, out of this little pullback. And there's no reason to make a big deal out of a market that's up 2-3%. Hopefully it can continue to move higher. That's my price target. My price target is higher. And now I think that a reasonable place for stops is underneath this area right here. This is the higher low on the daily time frame. So really at about 107 or so, as long as we remain above that, don't overthink Bitcoin. It's in an uptrend. It's at new all-time highs, and it's most likely heading for 115, 120, 125. Let's let the market tell us. Ethereum is also having a nice rally. Now it's up to the anchor off of the high here from when was that? 24. So be aware of that. It doesn't mean it can't continue to move higher. In fact, I think it's probably headed for about 3,200, and it's gotten a nice start in here. Solana is a little bit less. I'm a little less enthusiastic about it, simply because we have all this prior consolidation in this zone right in here that we need to get through. And Ripple is up against the anchor from the all-time high, as well as the year-to-date anchor. So ideally for Ripple, don't chase it. I think that it looks healthy. I'd love to see it pull back and then maybe get going, but it looks great. So don't overthink the cryptos. They're in uptrends, and just keep your exposure to what you're comfortable with. As I mentioned, again, I'm 100% long, have been for a couple of weeks. The overall equity markets, when we look here, again, this is the custom indicator on TradingView that if you're a subscriber to Alpha Trends or on Twitter, that I give you access to this. This is a simple 5-day simple moving average, the orange line, and the color shading just kind of gives us a little bit of a guideline in terms of where we are. When we're above a rising 5-day moving average, we're innocent until proven guilty. We're in an uptrend. We're in a stage 2. So we are basically green, good to go. That doesn't mean you can't buy every single place along here, but it means the odds are in your favor. You don't want to buy when it's extended, but what you want to do is see pullbacks to the rising 5-day moving average, and then buyers regaining control. And that's what we saw in the SPY here this week. Also in the the NASDAQ, the semiconductors as well. They're at another new all-time high today. And we even have the Russell 2000 showing a beautiful pattern of higher lows above that rising 5-day moving average. So these markets remain innocent until proven guilty. Don't overthink about it. I'm not taking questions right here, not quite yet at least. So if you have questions, I am not looking at those. What I want to do is provide some value for you. And if you've been joining me on the Sunday evenings, the events that I've been doing with StockTwits on Sunday evenings, then you know that my style of presenting is to give you some ideas. And what I'm going to do is share a different screen here. So we're going to go right now to TC2000. That is the, so let me talk about that for a moment. TradingView, when you see my TradingView charts, the reason I look at TradingView is it's a great platform, and I look at it because I can look at, it's got the anchored volume weighted average price, it's got multiple time frames, it's got anchored volume weighted average price levels, and you can chart Bitcoin, and other cryptos on it, and you can also chart futures on there. On TC2000, unfortunately, you can't chart the cryptos or the futures. So I use both. I am a big fan of TC2000. TC2000 has created a few indicators here on this screen that you see right now at my request. One, the anchored volume weighted average price. So when you go to add one of those. You'll see here when you hover over that anchor, it's called anchored VWAP by Alpha Trends. The other thing they added at my request was this vertical line here. This vertical line right now aligns with this moving average. So this is a 20-day simple moving average. And what this does is it tells me here's where we were 20 days ago. So that's important when I look at a stock like APP. Now APP has pulled back, and recently it found buyers in this zone. This is an important zone right here. So on this daily time frame, we saw that APP is in a nice uptrend, and it pulled back. And, here's why I always say don't buy the dip. You don't buy the dip to the 20-day moving average. You don't buy the dip to the 50-day moving average. And what we have here is orange is the anchored volume weighted average price from the election right here. Blue is the anchored volume weighted average price year to date. And green is off the April 7th low. So we have all these levels coming together in this same area. That's called a confluence. When you see multiple indicators showing you that a level has the potential to become support or resistance, when we see that based on different indicators in the same place, it adds more conviction to that level. It doesn't mean you want to necessarily buy blindly into that. As I always say, I don't want to buy the dip. I want to buy strength after the dip. So on the 30-minute time frame, on APP, you can see this is the recent high, and that aligns with this on the daily time frame. So basically, what we're looking at on the daily time frame is this area right here magnified over here with 30-minute bars rather than daily bars. So we have a much more granular look at it where we can get a better idea of what's going on under the surface. When we look at the 5-day moving average, that's that orange line here. And by the way, again, if you're looking at a 5-day moving average, never look at it on a daily time frame. Even if you were to look at a 5-day moving average on a daily time frame today, it would not actually be 5 full trading days, because last Thursday, of course, we had a half trading day. So you'd be basically looking at a 4.5-day moving average. And then tomorrow morning when the market opens, after the market's been open for 5 minutes, well, you're looking at 3.5 days plus, I'm sorry, 3.5 days plus 5 minutes. So you're looking at a very short-term period of time. When you look at the 5-day moving average on 30-minute bars, for instance, we're looking at 65 periods, 5 full market days. So this is the actual 5-day moving average. Now, we don't want to buy it when it has a declining 5-day moving average. We don't get excited about these. And then what we typically want to do is buy it when it's above a flat to rising 5-day moving average. So it rallied up, and then it came up towards the anchor from that high and pulled back in. So now we keep testing the anchor from that high. Now, looking at this is what I was talking about, this is the vertical line. This is where we were 20 days ago. So you can see that if you look in a little bit more carefully, the rate of descent of that 20-day moving average is declining because we're not getting rid of data from $420 per share. And we're not getting rid of data. Well, we are getting rid of data here today from 383 the last 2 days and tomorrow. So it's going to continue to decline at this pace. Then on, this will be Thursday, this will be Friday. On Friday, so if we have like an inside day tomorrow where we kind of consolidate and then we get going on Friday, I think APP is going to be a strong buy above this level here. So I'm looking at APP. I've been stalking this trade since it's been pulling back. I didn't buy the 50-day moving average touch. I didn't buy those other anchors. Those were levels of interest. And then the levels of interest say, drill down to a shorter term time frame to look for the actual evidence the buyers are gaining control. We have a little bit of supply right in here, a little bit of resistance. So tomorrow, ideally, we pull back maybe to the week to date volume weighted average price. We go sideways a little bit, and then I would probably buy it right here on anticipation that once it gets above this level, we'll be getting rid of this data over here, and the 20-day moving average will be above the rising 50-day moving average, will be above the rising 200-day moving average. So that's the way we want to look at these charts. There are other ways, of course, to look at charts all the time. We can look at it and point in figures. We can look at it on volume at price. For me, if I look at too many things, it gets a little bit confusing. Now, I look at a lot of things. So I will also look, of course, at MarketSurge And that is another software that I use. And the reason I like MarketSurge is they've got a great, let me change the screen again, and I will share with you MarketSurge. So here is MarketSurge for App11 APP. And what do we see here? Well, earnings are due in 28 days. What are the, I want to know a little bit about the fundamentals of the company. I'm not a fundamental analyst. I'm not looking to, write a report about how much I like this company and what I think they're going to do. But it's nice to see that the revenues the last 4 quarters have increased 44%, 39%, 44%, and 40%. At the same time, the earnings have gone up 305%, 317, 253, and 149%. Now, you might look at that and say, sequentially, we are declining. Year over year, we still have strong growth, but sequentially, the rate of growth is slowing down a little bit. And that's just a little bit of reason for, that's probably why this market pulled back down to the 50-day moving average and the other levels that we spoke about. But when we look at, what they did last year in earnings, $4.53. This year, they're expected to double that, or up 84% to $8. And then next year, $12 per share. So it's expected to be strong continued growth. This is the type of name that big fund managers, they look at it, they let it pull back, and they start to accumulate. And they're likely to look at this and say, let's continue to buy this. This is a growth company. Let's see if it can continue to be a growth stock. So that's, something that I will look at as well. Let's take one further look at this, and we'll look one more time at, actually, let's look at two different things. I will pull up, and it's interesting on FinViz. I'm sure a lot of you are familiar with this, and this isn't meant to be necessarily a talk about App11, but it shows that, what goes into the analysis when we look at a chart. So when we look at a stock and we want to make sure the odds are in our favor. So FinViz is a free site. They do have a subscription product as well. But if I look at App11, first of all, let's see if we can turn that. I guess I've got to close that. Okay, good. Well, here, let's do this. Let's get rid of, I don't know how to do it, but these lines are annoying. They're useless, I think. So when you have a paid account, which I do, but that's on my other browser, you don't get these annoying ads. So what I want to look at, though, is right up here, and this is free. This is a great tool. If you don't use FinViz for anything else, look at it for this. Right here is short interest. Now, I don't think it's very big in FinViz, I'm sorry, in App11, and you can see it's 5% of the float. So on average, it would take 1.3 days. That's the short interest ratio. That's how long it would take to cover that. So here's, there's 212 million shares in the float. The average daily volume is 7.8% million. And the actual number, you can see the actual number in December was 18 million. Now it's down to 10 million. So not necessarily so important for this stock. But if we look at it in terms of a point and figure chart, we can see a couple things here also with volume at price. So there's the anchor from the high, which we're right at as well, which tells me even more that we probably want to see the market, this stock pull back a little bit and then get going. And it has the potential for supply in here. I don't view it as a big deal, but because the daily chart looks so good, and we do have some shorts that are going to get uncomfortable in here soon. So these are some of the things that I always look at when I'm looking at a stock and trying to decide whether this is a good stock to trade myself and to share with other people. So let's talk about the stock that I just shared yesterday, which was DOCS, and here we can see this one. I shared it yesterday, and it's behaving well. It gapped up today and then pulled back. So as always, when I'm long the stock, I had bought calls yesterday, very close to the open. I sold 60% of those calls at a little bit more than a double. And then I used the 2-minute exit. If you're familiar with my, the 2-minute strategy that I talk about, it means basically if we undercut the low of the first 2 minutes, then I sell in this case, a quarter of my position. Then I sold another quarter position as it made a new low for the day. So I've got a 50% position in the stock, and I've got a 40% position in the calls. I still like the stock. I still think it's heading higher. So let's take a look. There's the anchor from the high. We just got back above that. Very similar to the anchor from the high over here and this high in APP. So that's a good idea to keep an eye on. Now, a lot of people are interested in Coinbase, for instance, or in MSTR. And I say, these are great looking charts. They're going to go higher. When I trade crypto, I'm going to trade crypto straight up. I trade on Gemini.com, by the way. I've got a great deal for commissions over there. I'm on their active trader platform. Coinbase is another great one, of course, and I think that's what most people use. I found, though, that Gemini is cheaper to trade on, and it's my money. Why am I going to give it to the people at Coinbase if I can give it to the Winklevoss twins, but give them less of it for giving me the privilege of trading this decentralized asset? So a couple other names to keep an eye on. And let me tell you, so this is something I'm going to do every week on Wednesdays for subscribers to Alpha Trends, as well as the subscribers to the Twitter Premium. I'm not going to go into so much detail on every one of these stocks, but when I see something I like a lot, I will point it out on multiple time frames and kind of lay out the logic for the trade and hopefully keep it as educational as possible. If you want to be involved on Twitter, it's $10 a month, and alphatrends.net is basically $1,200 a year. You get a whole lot more for it than what I'm doing here. So I just would encourage you to check that out. But the Twitter thing's a no-brainer, really, at $10 a month. And let's take a look at some other names. So like I said, I'm going to do this every Wednesday for subscribers to X and Alpha Trends. Almost every week. If I'm busy and I got something else going on, then I'm going to skip a week. But most of the time, I use 9 out of 10 Wednesdays, I will do it. Some other names that I'm keeping an eye on tomorrow, EVLV, maybe not as well known of a name. You look at the weekly chart, though, it's broken some resistance. It's a $6 stock, and that one might be able to continue to move higher. Fortinet, I bought some of this one today. Let's look at that weekly chart. It's clearly in a big uptrend. It had a nice shakeout here 4 weeks ago. It recovered on that weekly chart. Now in the daily time frame, we've broken a little bit of resistance. It got a little bit ahead of itself yesterday with that big move. So when I'm looking at, let's look at a 10-minute time frame. So, this is yesterday's action right here. So that's the beginning of the day. And then this is, I'm sorry, that was 2 days ago. This was yesterday's action with that gap. So let me just get rid of this. So yesterday we had a gap lower and then recovery. I didn't want to buy it above here, this so-called breakout, because it had just run from 103 to 108 to get there. It just rallied 5%. So instead, I put it on radar. It gapped up today. Some people got suckered into it. And I got involved because the daily VWAP, let's just color this blue. The daily VWAP stayed above the 2-day volume weighted average price where we saw that big move. And then later in the day, as the stock crossed back above that daily VWAP, I bought it right in here. Let's just call it 107. I bought it a little bit lower than that. But anyways, my stop now is going to be under here. And it looks like Fortinet can continue to move higher. I want to see how it behaves as it breaks this level right here. And if it starts to stall out a little bit, I might decide to take a little bit off because it might reverse in there. But if instead it continues like this and then goes on to new highs, well, that's obviously what I'm looking for in a stock like this. A couple of recent IPOs includes SailPoint, SAIL. This is the anchored volume weighted average price from the IPO. If you listened to me last Sunday, I was talking about the anchored volume weighted average price in Circle that from the IPO, and you saw that anchor held his support and then tried to hold his support pretty damn close to it. I bought above here and I was looking for the stock to rally up to the anchor from the high. And you can see that's exactly where it came up to. So it did exactly what I thought it might be do in the Sunday evening video. It doesn't mean it was an easy trade because, here we closed on this day at 200 and what was that? 207. We opened the next day down at 200. So that's a 3.5% drop overnight. But anyways, it rallied to where it was supposed to. And that's what we're looking for, is we're looking for market structure and to say, the anchored volume weighted average price from the IPO often acts as support. Well, same is true for a stock like SailPoint, SAIL, that it pulled back. So it had broken higher. It made a higher high right here, and then it pulled back. And as it was in here, I was thinking it's likely to pull back to the anchor from the IPO. I didn't buy there. Now, if you said you could have bought there, sure, you could have, you should have, maybe you would have. But the bottom line is that was guessing right there. I'm not in it to guess. What I want to look for is the shorter term time frame here on the 30-minute time frame and say, here's the anchor from that high. We're holding the anchor from the IPO. So the anchor from the high is up here, 2250. It doesn't mean I want to buy above there. In fact, I think it's too far extended. Here we are, not even 22. So I don't want to buy it 50 cents higher. I want to buy it above today's high with a stop under here. So if that sets up tomorrow, that's what I'm looking at. SanDisk is another one that was a recent IPO that looks very similar. Here's the anchor from the IPO. You can see that we pulled back close to it. We've got a rising 20-day moving average. We've got a rising 5-day moving average because this, again, is where we were 5 days ago. And that means tomorrow we get rid of this data, meaning even if the stock goes sideways, the 5-day moving average will continue to advance. So I'm looking at this SanDisk as maybe a buy above here with a worst case stop under here. This is the most recent higher low with a rising 5-day moving average. So I don't want to set my stop way down here and give it an extra $1 because if I buy it here, then my risk is $1.25. But if I buy it and set my stop down here, my stop is $2.25. I'm not interested in that. It's all about risk management and buying at the right time. I can't tell you how often the questions I get from people most often are about stocks like SanDisk on this day. That's not where we want to be buying. I like the way Hertz is setting up tomorrow. Hertz is, it had this big run that Alpha Trends subscribers were involved in. It got messy over here. I didn't buy this strength because of the declining 20-day moving average. Now we've got a rising 20-day moving average. Tomorrow, we get rid of this data in the 50-day moving average calculation. So guess what? This 50-day moving average is going to start to flatten out. And we've got a 20 up through the 50. And if the stock can get above here out of this tight consolidation, I want to be a buyer here with a stop underneath this level right here. That's the way I want to look at these. So tonight I was going to give a little bit of education about what I often talk about is, well, we started out with Confluence, and let's talk about the Confluence in TEM. Now, TEM has been a wild stock. This stock is all over the place. The 5.8% ATR does not really tell you the true volatility in this stock. These big rallies in here got absolutely annihilated. And, this rally here too, it made a higher high. This is why I don't buy breakouts. This is the breakout. I don't want to buy that. I want to sell into that and raise my stop and get stopped out over here. Now we're at the anchor from the beginning of the year. We're at the anchor from the high that we saw, the all-time high, and it's trying to stabilize in here. But it's a level of interest. Just because it's going sideways for 3 days this week doesn't make it a buy. Tomorrow we get rid of this data. Friday, we get rid of this data. So maybe tomorrow it does this, and then it does this, and then by Monday of next week or late Friday, TEM could be in a position to get going again. I would look for it to initially find some supply right up in here. Prior resistance acted as support. If it was to rally again, that's a nice 7-8% move. And I would look to tighten my stop. That's the way you want to look at it. It's not a price target, and it doesn't mean it can't make it through there. But you have to look at it and say, that's a reasonable place where sellers might end up, putting some stock out. Let's talk about UNH because I put that on Twitter here today, talking about, the anchor from not only that low there, but from the gap down, and that it's finding I'm sorry, support in this zone. Now, does that mean it's a buy? Not to me, it doesn't. I really have no interest in UNH. I just know it's a stock a lot of people talk about and like. So you look at it and say, we had this rally up and it failed. We're below the month to date anchor. We're below a declining 5-day moving average. We're finding buyers in here. So if you're the type of person who buys at perceived support, now's your time to get involved. That's not my strategy. And I'm not trying to say that my way is the only way. I do what's comfortable for me and my risk tolerance. I know there's other ways to make money in the market, but they're not suitable for me and my personality. So if you're going to be a buyer of this type of stock, you have to look and say, okay, it's bouncing from that VWAP. Maybe I buy here, but then you have to put your stop under here, because if it breaks below these VWAPs and gets stuck below it, it tells me that on average, everyone who's involved since this gap lower turns to a loser below $300 per share. And if they're feeling bad about it and they start to think, hey, the bounce isn't materializing, and the short sellers say, hey, now we got them, they start pressing on this thing, this stock might end up going right back down to these lows. If you're long this stock or looking to get long this stock, honor your stop. You can, even if it goes down, stops you out and goes back up, you can always get back involved. But it has the possibility, if it breaks down here, that it can continue all the way down. And that's not good, low risk, high probability trading. I guess that'll do it here. We're at 7:00. And again, thank you for your patience while I figure out this software. And I think I've got it figured out. I'm going to see if I can do a private test next time to make sure it's absolutely 100%. Hope you got some value from this this evening. And I would encourage you to take a look at that X subscription. If you've noticed, I haven't been posting as much on X. It's because I'm providing value to subscribers, and that's the where it goes. I've been doing this for 33 years, and hopefully I can impart some of my experiences to you and some of the knowledge I've attained over the years, decades. So thanks for tuning in, everybody. I hope it was valuable, and we'll do it again soon. Good night.